Right. So I'm guessing if you clicked on this video, right, you saw the thumbnail and you're unprofitable, you're not making money, or you can't consistently make money in the markets. What I'm going to do is I'm going to try to keep this really short too, because in my opinion, this does not take that long to understand. And I'm just going to hand you guys a model that will make you profitable, especially if your discipline and your psychology is already locked in. You will for sure be seeing consistent profits a week or two from now after you get some screen time with this model. And before I do start, all I want to say is you need to have your discipline, your psychology locked in before you even start trading, before you even start placing trades behind the markets. If it's not, go watch some videos on psychology, do some self improvement, and then just really open your head to like how trading works on the psychological side of it. Okay, before you start going to the technical analysis and all that stuff, like that part of trading, because you'll never be profitable without good discipline and without decent psychology. All right, so to get started, this is the 2022 ICT mentorship model. If you want a full breakdown, like behind the science of it, you can go watch ICT's 2022 mentorship. It is like hours long. So that just gives you the full breakdown, like really deep into the model. If you just want to know the model, you don't want to know why price does this, blah, blah, all that. Perfect video, okay? So I'm just gonna get started on NQ right here. All you need to know to trade this model is fair value gaps, displacement, trends, and how to find resting liquidity, buy side and sell side. And that's about it. All right. So to get started, right, I'm going to give you guys a bullish and a bearish example. A bullish example of this, right? So I'm just going to use data highs and lows for an example. We're going to use a data low. So imagine price is going like this. Okay. Boom. Like let's say data came out here. Like the candle would be something like this. Wicks are massive all the time. And boom. This is the wick right here, the low of the data, and it's the lowest low there is. It's the most prominent low. It's very visible, creating this low. Awesome. Now what you're going to look for, if you're going to look for longs, is for price to do something like this. Okay, the resting sell side liquidity is right here. The second price sweeps it, which means a wick goes under or a body closes under this. As long as price gets under this, the entry's forming. Now, all you want to do basically is wait for price to start shifting upwards and for a body, not a wick, but for a body to close above this high, creating a market structure shift. If you want a more in-depth explanation on how to spot market structure shifts, they're not that difficult, but you could go on YouTube, watch it. It'll take you around 5 to 10 minutes to learn. It's not that difficult. It's literally just higher highs, lower lows. And once this market structure shift happens, we get a really good indication that market is switching into a bullish direction. Okay, so off of this, we can immediately tell that if market's already switching into a bullish direction, especially that this data low got swept, this high hasn't been swept yet. There's really, really, really high possibilities that price will be up here pretty soon. Okay, so all you're going to look for is this would be displacement. Like a really good entry model for this would be if the market structure shift is caused by really big displacement, and you would have a fair value gap here. Okay, and all you want to do is wait for price to retest the fair value gap. Make sure it's a valid fair value gap and that it's not getting inversed. And once you get that, your entry would be right here. Take profit one would be at these highs. Take profit two right up here. And boom, price usually will just come up here. Boom, take those two out and you're done for the day. It's that simple. It's just liquidity being swept, market structure, shift, and then entry off a fair value gap. And that's it. Now just place your take profit at whatever highs you feel comfortable. But yeah, that's about it. Just place your take profit on the highs that you feel comfortable placing it at, and you'll make money off this. This is a bullish example. Now I'm going to get into a bearish example. Bearish example is the same thing, but with buy side liquidity. So I'm just going to use this. Let's say that we have a prominent high up here. Like this is the daily high. Okay. Previous day high, or like just the day that you're trading the day high. But if you're trading AM session, this should be like either a really prominent high or just a previous day high if price hasn't swept it yet. And this would be your buy side liquidity. Okay. What you're going to look for is for price to come up here, same thing as here, sweep this buy side liquidity. All right. Now, actually, yeah, sweep this buy side liquidity, and then start doing stuff like this, and then displacement causing a market structure shift at this low, and then let's just say fair value gap happened right here, and you're just going to wait for it to retest the fair value gap. Entry would be right here. Price comes down, and you do take profit at this low, or if there's any better ones that you think are there, and boom, that's it. Now this seems a little bit too good to be true, but it's not, because once you start back testing it, which you should be doing, you'll realize that this happens all the time. You could easily take 3 or 4 trades a week with this, and I would say if you take 4 trades a week, usually 3 of them would hit, if not at least 2. Okay? And that's all the model really is. I'm going to give a few live examples, but this is all you need to know for the model is just this. And before you do start putting in live trading, back test it for at least 5 to 10 hours so you get that screen time. But once you do that, you're chilling. Go into live, especially if you're disciplined, your psychology is on lock. Go into live, you're going to make money with this. Now, a live example, I'm going to show you when I took this trade. Let's see. This was today. Okay, so I was awake at around 7:15 was when I started trading today in the morning. Market for me opens at 8:30, but data did come out at 7:30 today, and yeah, that's the data candles. So we can very obviously tell here there's no buy side liquidity. When I was looking at this, price is only like around here. Okay, you can see there's no other highs here. This is a prominent high, which means if you know how to find buy side, sell side liquidity, which you should be able to know to trade this model, this would be where your buy side liquidity is at. Now, I personally took shorts because my daily bias was for shorts, and also because we are in an uptrend. So if I was going for shorts, would it would be easier for me. But I'm 99% sure you probably could have found a long in this. So I'm going to show you a long and short example off the same exact off one candle's highs and lows, but this is a data candle. You can't do this with every candle. If there's no data, it would be highs like this and lows like that, like just really prominent ones. Okay, for your buy side and sell side liquidity. Now the sell side liquidity for this data was down here. So if we're looking for longs, we're looking for sell side to be swept, which you can see we're on the 1 minute time frame. Sell side got swept instantly after this data came out. So awesome. All we have to look for now is a market structure shift, and then we can start looking for a long. We come up here. Now this right here, like, yeah, it's cool that it came up and then came down and then closed above. I would personally not count this as a market structure shift. I want it to be a lot more prominent. So I would wait here, boom, 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 comes up, comes down, creates this high. So now my market structure shift, I'm looking for a candle to close above here. Okay, comes up, closes above it. Awesome. You're looking for longs now. Okay, we're coming down here, bearish, bearish, bearish for value gaps. And from textbook right here, green candles, but you want to see this one forms, and you have a fair value gap right here. And all you would have done is just boom, target data highs, which, yeah, they got hit. And then stop loss would be right here. And what happened? This third candle after this fair value gap was formed came into the fair value gap. This, even if you were setting up your trade, this candle right here also came into it. Boom, hit your entry, a little bit in your stop loss, but that doesn't matter. And comes up, take profits hit. Okay, you could have done like take profit 1, like maybe here or here, and then take profit 2 for sure at these data highs for your runners. But personally, if I would take this, I'd honestly just go lower risk and just 1 take profit up here. And your trade wouldn't hit. The trade that I took was a short. And so what I was doing was obviously waiting for buy side to be swept, which happened right here. Awesome. Buy side got swept. And what happens? We come down here at this low. A candle closed under it. Market structure shift. Awesome. Now I'm just going to look for an entry. What happened before the market structure shifted? We had a huge fair value gap right here, which even if you don't know how to find the areas where price is most likely to bounce off of within the fair value gap, you could have still took this trade just by knowing the basics of fair value gaps like this. Stop loss up here. And then targeted either take profit 1 at the data lows and take profit 2. Mine was right here. You still got a 1 to 2 RR trade. And it would have been amazing because price came up, got into the fair value gap, never inversed it, hit it, and immediately down, just crushing your take profits. And I'm done for the day. Market opens for me at 8:30, and this was 8:40. 10 minutes into market open, I'm done for the day. I'm in profit, and I'm not trading anymore. I can go enjoy my day, do what I want to do. Right? That's how easy it is to trade this model. It's so simple, and all you need is just good psychology, good discipline, which takes some time to get, right? But everyone needs to spend at least like a year before even being profitable, unless you're really, really locked in and you're just built like that. But if you have the discipline, you have the psychology, and you know the concepts you need to combine to use this model, you can just back test it. And within 2 weeks, I'll bet that you will be seeing profits consistently. And it's legitimately that simple. There's not much more explaining to do. If you want it more in depth, like I said, ICT's 2022 mentorship, watch that. But if not, that's the model. And thank you for watching. If this helps you, please leave a comment. If I did anything confusing, if I was explaining things a little confusing, leave a comment so I can fix that. And yeah, I hope this helps you because when I was first like trading before I was profitable, this is the model that made me profitable, by the way. This is literally what changed my trading, and I'm hoping it does the same for you if you didn't know it. And yeah, thank you for watching. See you guys next time I feel like posting. So yeah, thank you.